Welcome to another episode of Yahoo Finance's Opening Bid podcast. I'm Yahoo Finance Executive Editor Brian Sozzi. Now let's make some money and get a lot smarter. Really cool guest with us next. I've been very, very excited to talk to Kathryn Kaminski, AlphaSimplex Chief Research Analyst and Portfolio Manager. Good to see you, Kathryn. And holy cow, it's been a crazy week in the markets, right?
Yes, I mean, I'm just glad Monday is a quiet Monday today. That's all I can say.
Yeah, well, hey, look, this stuff can go fast. This stuff can go south real fast, Kathryn, as you know. I mean, it's been a crazy August, but I mean, this is what tends to happen in the summer, no?
Yeah, I mean, August has been plated with a lot of huge deleveraging, things like the quant crash. We've had that event in China as well. So, it tends to be a quiet time, but then all of a sudden it isn't. So I'd say, it's not surprising that we have these type of reversals occasionally in August. It's quite common actually over history in the last couple of decades.
So true. So before we get into all things markets, I wanted to set the tone with this because I do think it will give listeners and viewers some context on how you approach markets. So you were a visiting scientist at the MIT Laboratory for Financial Engineering. Like, what is that, and what's that role?
So what's awesome about the Lab for Financial Engineering, it's really about studying the financial markets. We did all sorts of interesting things like study traders. We also historically have they've done research on emotion and trading. And let me tell you a cool fact about some of their research. They found that cortisol levels or stress levels in traders' bodies was actually correlated with the VIX. So it's not surprising that you had a tough week last week, and so did everybody else.
Wow. So basically, you had traders at their desk probably ordering fast food last week because the cortisol levels were up. I mean, they were just so stressed out.
Exactly. Isn't that crazy that your actual physiological reactions are connected to that VIX? And let me tell you, last Monday, you probably had a lot of French fries.
For me, in the news business, we just tend to do two things. We recaffeinate during the day, and at the end of the day, you hit that whiskey. I mean, let's just be real, Kathryn. I mean, that's just the reality. But interestingly enough, after that, you began your investment career in 2008. Is that right? Right? Was that before or right in the middle of the financial crisis?
So I started in the space right in the middle of the financial crisis, and I was in managed futures. And I don't know if most people know, but managed futures was one of the only strategies that really hit the lights out in 2008. And it really spawned my career to spend all of my time trying to understand what type of strategies actually do well during crisis, when, and what type of positions do you see during crisis periods. So I came up with this term crisis alpha in my research. It was a really exciting time to be in this space.
Are you finding, well, what is crisis alpha? And then are you seeing any signs of that in this crazy market?
So crisis alpha are the potential profit opportunities during periods of crisis or dislocation. And they're very different. Crises are all different. I mean, if you take COVID as an example, or you take this inflation crisis we saw in 2022, what we just saw was much more of a correction. But what concerns me is that corrections often hint that a crisis could actually be impending. So I think the key thing right now is to watch the data and see if this could be a real crisis that unfolds, where we have a bigger recessionary move.
I've been telling everybody this isn't a crisis, Kathryn, so thanks a lot. So what would cause a crisis? Because, the things that I see, so I went out over the weekend, restaurants are full, people are out there spending money. That seems to be pretty good, just anecdotally. The economy is still growing. What are you looking for that would suggest a crisis is looming?
So I think the things that we have been watching in the last few months is there a growth story or demand destruction story where you see consumers just being too overextended? And we see now inflation going down, so that's positive. But when we go from inflation to deflation and prices start to drop, that is where you get a little bit more concerned. You could have some acceleration. So I think for me, it's all about growth. It's all about the consumer, and it's all about how do we navigate until we get lower rates.
About 2 weeks ago, were you seeing signs in the market that made you concerned?
So actually not 2 weeks ago. I'd say I really started to get concerned in June. June started to see some pretty severe cross-asset sell-offs. And I think from our side, we really are technical base. We look at the trends in the market space. And what we've seen is sentiment in those cross-asset trends shift from inflation focus to potential growth stories. So we saw commodities go from long to short signals. We saw bonds go from short signals to long signals over the month of July. And both of these are classic risk off potential recession trades. And the other thing that's interesting is equity tends to be the last to fall. So I don't look at equity signals as much to know, because as we know, it's very hard to know when that's going to happen for equities. I think we stay complacent pretty long in equity markets.
How do you, I wasn't going to go here, but how do you start your investing day? I imagine it's a lot different, just given your scientific training and when you wake up in the morning. Of course, you visit Yahoo Finance. I get it. But like, what else, what other things are you looking for? Do you have a watch list of stocks, watch list of charts?
So I usually start my day by looking at cross-asset positioning and then how the market is opening up relative to the different asset classes. And so a day like today, you saw very little movement. So we actually look very closely at our positioning across multiple asset classes at the same time. So it's really about those macro themes and how they're moving. And so it's much more of a cross-asset type of way to think about things.
Do you think investor complacency has gotten pounded out of this market, or there's more pounding to go?
Well, I think the challenge for equity markets is I feel like it's the last place people move. They wait until the last moment before they actually say, wait a minute, this has changed. So if we look at COVID as an example, that was really phenomenal to watch what happened. People started hedging, they started buying bonds, they started selling off, seeing demand destruction, but the equity markets didn't fall. And when they fell, they really did. And so I think that's what concerns me about trying to follow equity signals to understand if there's an impending issue. It's much more about following where are the commodity markets moving, where is the bond market moving, which actually is much more of a way to understand how people react first.
I read somewhere, Kathryn, that you view yourself as a trend following nerd. But I think a lot of people that are on Yahoo Finance, they've been trained to think of markets and stocks like Warren Buffett. I buy one share, I hold for the next 107 years, and my family over many generations make lots of money. Take us inside your approach, and why is that so important to you?
So trend following is a super cool strategy because what you're really doing is allowing the data to tell you where the trends are, as opposed to starting from a fundamental view, like this stock is undervalued or these markets are undervalued. We're much more about following the prevailing themes as a function of where markets are moving, which means that during crisis or difficult periods, we can react and actually adjust a little more quickly than a typical fundamental approach. And so it's very, it's an exciting place to be because, really it's about building models and following market data as opposed to trying to have a call on, should I purchase this stock or is Apple undervalued?
Are you seeing trends in the market that would suggest we've hit a bottom?
I wouldn't say bottom. I mean, we tend not to look for bottoms because that's more of a valuation approach. What we are seeing is shifting themes, and that's how we tend to think about the market. When we see shifting themes in asset classes, so when we see commodity signals go from long to short, this suggests some momentum in sort of downward movement in prices. And when we see people moving aggressively to fixed income, that tells us a little bit about how sentiment is changing. Because I think picking the tops and bottoms of trends is actually quite difficult. But when you see themes changing, there's opportunities to move with those changes over time.
Well, then what do you make of this one? So and I didn't realize this until I was crunching some numbers over the weekend, only two members of the Magnificent Seven have outperformed since June. What do you make of that rotation out of some of these stocks that have been drivers of the market for the past 5 years?
Well, this doesn't surprise me because I mean, at some point, valuations have to be overextended and people have to get nervous about relative valuations and the idea that, the trend taps out. At some point, if everybody's in the same positions, you will start to get nervous. So to me, that is not surprising given the miraculous moves that we've seen and how much people have overweighted their portfolios into these stocks.
How should an investor figure out if it's time to get back into some of these names?
Oh, that's a tricky question for me, especially as a trend follower, because it's really about the strength of the move. And given the strength of the move, the farther out into a trend that you get, the noisier the signals get. So, trend signals in general across different stocks, when you start to get to that point that they're deteriorating, it's often, in sense, a time to take profit. So I think that it is going to be very tricky to know what's the right entry point. And you also have to have a view about, how these companies are going to navigate the fall when we have sort of maybe some very different economic conditions.
Hang with us, Kathryn. We're going to go off for a quick break. We'll be right back. All right, we're having a great chat here with AlphaSimplex Chief Research Analyst and Portfolio Manager Kathryn Kaminski, loving her scientific mind and how it applies to all things stocks and what really has been a bit of a crazy August. And I would argue, Kathryn, in August that a lot of investors weren't prepared for. I mean, talk to us a little bit about what drives investor complacency.
Well, I think we all have this view that things are on average going to go up. And I think as more and more people concentrate into the same positions and valuations become more and more extended, we move into a phase of hope. And I think that that hope that things are going to work out can hold on pretty strongly. And the challenge with that is that whenever you have sort of a very quick shift in sentiment with high concentrated valuations, you just become much more susceptible to asset class sell-offs and repositioning and adjustment in the market. So I think that's why you see those fat tails, the big outlier type moves in equity markets. I mean, look at this year. It's been such a fantastic year for equities, and then we have one or two or a couple of really tough days. That's a very classic pattern for equity markets.
Has it been a good year? It doesn't feel like that anymore, Kathryn. I mean, to your point, you get roped into these volatile weeks or week or two, and suddenly investors forget on how really good a year it has been for many stocks. But as I look into the back half of the year, do you see anything good? And I ask that because, of course, we have the election. That's one thing. But you've now started to see, I think, earnings estimates on the street start to come down. You heard, a lot of the CEOs that I talked to voicing concern on the state of the U.S. consumer. You have inflation still high, and now this new narrative. I don't want to call it a theme, but there's this new narrative. If the Fed does cut rates, it might be reactionary. I mean, so bullet point by bullet point, it doesn't seem like a catalyst to go out there and buy stocks.
Definitely not. And I think that's the challenge is that you've seen like trend momentum signals cut significantly. And to be honest with you, I think the opportunities may be also outside of equities. So, for example, going ahead and locking in higher rates if you anticipate that change and sort of taking advantage of the shift in monetary policy. I think there's also going to be macro themes related to growth that could be interesting. So, I think equities definitely look like they're going to be hard to predict for the next few weeks and few months, just given sort of valuations, where we've been, and just the level of uncertainty that around the policy change and also elections. I mean, it's going to be wild, I think.
I tend to agree with you that it will be wild, which means it won't be wild and things will just go up and 2025 will be absolutely amazing. But that's how markets work. What do you think about, and this is just the new narrative, I just mentioned it too, this view on the street that if the Fed cuts rates, that's reactionary and suddenly bad. Now, a month ago, everyone was clamoring for a rate cut, and that would be good. People will go out and buy homes. They'll go out and buy a new Tesla EV. Life would be wonderful. You maybe get another 50% move in NVIDIA after reports earnings in late August. Things are great. I mean, wow, how sentiment changes. I mean, what would happen? The Fed comes out here in September, cuts rates by 25 basis points. What do you think the market reaction could be?
Well, I think if they go with 25, it's kind of consistent with what they were already projecting. I think the challenge is if they go with 50 and they come in and everyone reads it as they're too late, they waited too long. And, if you put it into context that several other central bankers have already cut rates, and in general, many people think that the Fed was too slow to start raising rates initially. So I think there is definitely that interpretation that we could have never imagined 2 or 3 months ago. Wow, they're reactionary when they've actually been pretty slow in terms of their policy stance.
You mentioned a couple potential growth themes going into year end. Can you share a couple?
So for us, I think we're really not seeing as much positive momentum in the equity space, but I would say that it could be a good time to try and lock in rates and also, try and pay attention to other sectors that might better navigate this particular environment. So looking into more quality companies that may weather all of this volatility a little bit better than some of these high flying names. So things that really could actually benefit from lower inflation and also some of the, get through the turbulence, and one might say.
Help us build, and I guess in some respects you just did, but help us construct a portfolio. Let's say I'm a new investor and I really don't know anything about stocks. How do I go about building a portfolio from scratch in this type of environment?
From scratch in this type of environment, I would always lean on diversification, and I would want to look at different themes and strategies that might also do well in a period where we could have a correction. So you want to lead into growth and you want to lead into stocks that could have sort of weather this volatility, but you also want to look for diversification across other asset classes and things like something like managed futures, where you have a strategy that actually likes crisis and corrections as well to kind of balance out the risks on both sides. Because we could have a soft landing, but we could have also sort of a correction period, which eventually will recover, like stocks tend to do over longer horizons.
Do you subscribe to that view? Hey, Nike's selling some really cool shoes. I just bought them and they cost $275. Go and buy Nike stock.
I'd say as a trend follower, not really. I'm more classically trained in finance. So I kind of think that, people tend to know this information and that information enters into the marketplace. And the reason why we follow themes is we're really following themes of multiple investors doing things at the same time. Oftentimes, if that's the case, that narrative is often expressed in the behavior of investors already.
And I think I undercut the price. I think those new pair of Nike shoes were probably $4. I mean, these prices are out of control, Kathryn. They're just ridiculous. As we start to wrap this one up, do you see, and I would say the first 6 months of the year, I'm curious if you agree with me on this, the first 6 months of this year were really Goldilocks. Things were going up, earnings were beating, and NVIDIA was doing good. Everything was going good in the markets. Do you think it will be a challenge, or do you think we will return to that Goldilocks narrative this year, or is this more second half 2025?
I think it's going to be hard to maintain the type of move that we saw earlier this year. I was second guessing it all the time. You had equity signals at such strong levels and such persistence in, returns, and people just having a fervor and focus on AI and technology. And I think given the backdrop of changing monetary policy and also just the uncertainty around elections and, what does it mean to go back to normal inflation, I think it's going to be harder to maintain such a strong move in equity markets. It was pretty miraculous, to be honest with you.
That's for sure. What have you going back to when you started in 2008, what have you learned from managing or investing during periods of crisis?
So what's very interesting about being a systematic investor is that we follow a process. So that means that our positions are a function of the data that we're measuring, and movements in the market are incorporated in a systematic way. And what I've found is that the more uncomfortable that I am and the more nervous I am, often the better it is for our types of strategies. Because when people are nervous, when sentiment changes, and when things are stressful, it's extremely difficult to make decisions. And that's precisely when it's a good time to be a systematic investor, because how can you make decisions in a moment like Monday? You're just overcome, like I said before, with cortisol. So it's really about the process.
What is it like having those calls or meetings with clients? So everything is, and maybe let's just use Monday as an example. Everything is melting down. What are those calls like?
It's always difficult because investors panic, and they often call and say, what's happening, what are you doing, what's going to happen now. And it's very interesting to be a systematic investor because we have to say, and what we do is say, we stick to our process. We know that we have our models are going to measure the movements and we will adjust our positions accordingly. And that is very different than a discretionary trader where you have to, in the heat of the moment, decide, is this over? And if you think about it, how many people thought it was on Monday? I mean, would have made a choice to sell, panic sell. And I think that's what's really important about systematic trading is it gives you some discipline.
For those listening or watching Kathryn, they're like, Kathryn seems pretty cool. I want to invest like her. I mean, to me, it makes a lot of sense. Over your career, maybe two parts here. Do you have any mentors you can shout out or books that you have read that have helped you become the person that's sitting in that chair today?
So I have a mentor from MIT, my thesis advisor. His name is Andrew Lowe. He is sort of a big guru in the quant space, and he taught me a lot about systematic investing. He also taught me a lot of things about adaptive markets. So he has this really good book called Adaptive Markets that I would suggest. I also wrote a book on trend following because
Shout out the book. Shout out the book. I was teeing it up for you. I think it's a very, very helpful read. Very helpful read.
Trend following with managed futures.
All right.
The search for crisis alpha.
Are you, that was was like 800 pages or something?
488.
488. Oh, wow. I mean, that is, you have any other plans any more books in the works?
I'm working on one. It's more of a thought leadership book, but I think you should always be working on cool articles and papers. It's kind of a passion of mine. So.
That is very true. Last one before I let you go. Your biggest secret to success in investing?
I think it's being aware of my emotions and sort of understanding the role of emotion in investing. Because I think why I'm so fascinated about systematic trading is it's about decoupling emotion from the process. And I think that's what's fascinating me the most about investing. It's about people, and we have emotions, and they cause us to make different decisions. And I think that is really a key to how you perform over longer periods of time.
Well, I thought these markets were just run by machines, Kathryn. I mean, there's real people behind this stuff?
Of course. I mean, you mentioned the GameStop before, and, we talked about that. And, there are people behind the decisions. And that's what makes markets so complex is that they're not robots. It's really about different people's valuations and how they feel about investing that actually has a big impact on market moves.
Really enjoyed this chat. AlphaSimplex Chief Research Analyst and Portfolio Manager, Kathryn Kaminski. Welcome to the Opening Bid fam. Appreciate your time. Look forward to connecting again soon.
Thanks, Brian.
All right, and that's it for the latest episode of Opening Bid. But before you go, I want to remind you, we just had a great chat with Meta's former head of AI, Jerome Pesenti. He had a few choice things to say about Elon Musk building robots. Also dropped a couple interesting words in general about the future of Tesla and the future of AI. I encourage everyone to check that out. We had to use a couple bleeps on that episode, but I guess that's what makes doing a podcast very fun. And then, of course, recently caught up with Ford CEO Jim Farley in Detroit about the future of EVs, autos, and election. I encourage you to check that one out on Yahoo Finance on the Opening Bid page or on your favorite podcast platform of choice. And that's it for Opening Bid.